year. Bank of America Merrill Lynch said in a research note that it has revised its 12-month gold target to $2,000 an ounce. J.P. Morgan said that gold could reach $2,500 per ounce prior to the year end. Goldcore out of Ireland said that since 2003, the real high of $2,500 per ounce, inflation adjusted and based on the CPI, would likely have to be reached prior to gold being in a bubble. Those informed about the gold market know that absolutely nothing has changed about the supply and demand dynamics driving the gold market. One thing that we have in our favor right now, too, Harold, is gold and silver seasonality. And I didn't put seasonality charts in the newsletter this week. Maybe I will next week. We did it back in the summer as a reminder. But when it comes to September and October, gold seasonality and silver seasonality is very, very strong. You see a lot of Asian customers coming into the market due to holiday seasons. That includes India and China. In fact, gold sales in India may increase 25% during festival season. And that's something to keep in mind as well. Not only do we have all these economic issues, but we also have the positive wind at our back that includes gold and silver seasonality. The telephone number to invest in precious metals, 1-866-623-2002. One thing that Goldcore talked about this week, and I thought it was very, very important, put it in the newsletter. They say there are three key metrics which strongly suggest that silver remains far from a bubble, if not undervalued. The first is silver's real price today, adjusted for inflation of the last 31 years. Silver's real high in 1980 was $130 per ounce, more than double the price today. The second is the gold-silver ratio, which has averaged 15-to-1 throughout history due to geology, and the fact that there are 15 parts of silver to every 1 part of gold in the Earth's crust. Silver, unlike gold, is an industrial metal, and a very significant amount of all the silver that has ever been mined has been consumed, like oil, since the dawn of the Industrial Revolution in the 19th century. Most analysts with a long-term view believe that the ratio is likely to revert to the mean of 15-to-1 in the coming years. The third metric is comparing silver's current bull market to that of the 70s. Silver has risen by a factor of 10 in the last 9 years, from $4 in 2001 to over $41 today. In its bull market from 1971 to 1980, silver rose by 3,199%. 31.99, or by a factor of 32 in just 9 years, culminating with the blow-off in 1979. Today, the physical supply of silver bullion is much less than in the 70s. There's also the Asian factor, and 3 billion people with growing incomes, many of whom see silver as a store of value against currency depreciation. Demand for silver in India and in Asia and China has been increasing, and China alone, their silver demand is increasing from a near zero base. The demand was not present in the 70s. Were silver to replicate the performance of the 70s, it would have to rise 32 times or to $130 an ounce, 32 times 405. Interestingly, $130 an ounce is also silver's real high from 1980. Our long-held belief that silver could reach the real high inflation adjusted of 130 remains. However, price forecasts should be taken with a grain of salt. But one thing is for sure, silver's value as a financial insurance policy and a store of wealth cannot obviously be denied, and people are holding it because you're in a scenario where they don't want to be debased. They also wrote an article, Bloomberg picked it up, silver is poised for a golden cross in advance to a record of $50 based on technical analysis. And Harold, one thing that we've heard a lot of, and James Turk came out this week and mentioned it in an article, that he expects a very big September for gold and silver. He says, no matter how you look at it, August was a solid month for gold and silver. Silver was up 4%, while gold climbed a spectacular 12% by any measure. That was an awesome performance. He says, I think September is shaping up to be another great month for precious metals, so don't be misled by the slow start of the month, obviously the last few days. He says September 20 and 21, we have the Fed meeting, which will likely be announcing more policies that will debase the dollar. This should send gold and silver significantly higher as we move towards the end of the year. So get ready to see gold over 2,000, silver over 50. He says if it doesn't happen in September, which he sees as a 50-50 possibility, the odds improve to 80% that it will happen in October. The bottom line is investors should expect a big September-October for gold and silver, just like the one we had in August. And as I mentioned to you, Harold, before we started the show, the summertime is usually a very quiet time, and we had gold and silver running. Just imagine what will happen when we get into September and October, and we factor in seasonality along with all the other financial factors. We could really see a potential explosion.
You bet, and it is exciting. You know, it's only exciting when you're in the market. It isn't exciting if you're sitting back watching it. So the fact is that if what we're saying to you makes sense, you know, get something into these assets while you still can. There's no doubt in my mind that we're going to get this strong rally going to the last quarter of the year. We saw it last year, and last year was a tremendous year. We saw silver go from $17 to $30 in just 90 days. So, again, hold on to your hats if you're in the market. If you're not in the market, give serious consideration to what we're saying. The fact is, Randy and I don't make any money whether or not you buy gold or silver or not. We do the show because we want you to be enlightened as to what's going on. We've been doing the show for 10 years and want to make sure that our Canadian clients and listeners are doing the right thing. The fact is that gold could go absolutely parabolic, because the fact is that the general public has not even gotten into the market. The reason that gold and silver has gone up is primarily because of fund buying and buying from countries like China and India. So the fact is that when the general public gets on board and they understand the reasons for getting into this market, that's when you'll see silver really take off. Silver is the poor man's gold. Gold at $1,900, $2,000 may be too expensive for the general public to buy. However, silver at $40 to $50 isn't. And the fact is that the ratio between gold and silver will eventually get back to that 15, 16 to 1. It's historic. It happened in 79, 80, and I predict it'll happen again.
There's only one company that Harold recommends that you use when it comes to investing in precious metals. That is Worldwide Precious Metals. Their telephone number, 1-866-623-2002. Their website, wwpmc.com, wwpmc.com. We're going to come back and talk about diamonds, investing in diamonds, as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on September the 2nd, 2011. Our time is 9:11 Mountain. That's 11:11 Eastern Time. Radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, catch up with us on Harold's website, HESradio.com. If you'd like to hear the show again, it's all archived there, HESradio.com. There's only one company that Harold recommends you use when it comes to investing in precious metals. That is a Canadian company. They've been in business the entire time this bull run in precious metals has been underway. They've been through all the ups and downs of this market. They're very, very experienced and knowledgeable, and that's who you want to deal with, people that only specialize in precious metals. We can't stress that enough. Their telephone number to connect with them, 1-866-623-2002. The website is wwpmc.com, wwpmc.com. The telephone number, 1-866-623-2002. When it comes to investing, you must also consider diamonds. And that is something, as we mentioned on the last show, that is obviously in the past something people did not consider. But even the most intelligent and high net worth people are investing in diamonds because of what's happening in the paper asset market. They're being debased. They're buying diamonds, precious metals, real estate, art, because they don't want their currency debased. They don't want to lose money as a result of that. Herald's website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. News this week. We have two great articles in the newsletter. You can get them from Herald. Connect with him by going to the website, rarecoloreddiamonds.com, or calling him at 1-800-432-1022. We have, and this is from the Financial Times, diamond prices soar on Asian demand. Diamonds have emerged as a haven investment alongside favorites gold and the Swiss franc, with surging demand from Asian buyers driving prices for the precious stones. Consumption from China and India have helped boost prices nearly 50% since the start of 2010 mostly. And you can read that article in the newsletter. We also have another announcement. Rare yellow diamond is going to be sold at a New York auction. A vivid yellow diamond weighing 32.7 carats is expected to fetch up to $8 million when it's sold at auction in October, according to Christie's. You can read that article in the newsletter. And on our side of things, rarecoloreddiamonds.com announcing the featured diamond of the week, the Bella Brillante Gialla. It is the newest addition to the Dream Collection jewelry line. This stunning ring is made of platinum and very fine yellow and white diamonds. It is also a beautiful, and it has a beautiful and extremely rare red diamond inside the platinum band, showing it's from Harold Siegel and rarecoloreddiamonds.com. The Gialla setting is perfect for a radiant, cushion, and emerald-cut diamond. This ring and setting are handmade masterpieces. Every diamond investor must have in their portfolio or collection something from and Harold put this together, the Dream Collection jewelry line. The Gialla is simply stunning, and we have pictures in our newsletter, Harold, and it's rather ironic that they're putting up this rare yellow diamond for sale in New York in October. They're expecting $8 million. And I'll tell you, what we have here with the Dream Collection Gialla is simply stunning as well.
Well, thank you very much, Randy. Isn't it ironic and so funny that, when we brought diamonds into the forefront 6-7 years ago, when nobody was even talking about diamonds, who would have ever thought that a yellow diamond would sell for $8 million? And the fact is that yellow diamonds are going through the roof. They're skyrocketing in price. They're going to go up 35% in September alone. And again, in 1979 and 80, yellow flawless diamonds went up 500% in 2 years and did as well as gold and silver. So again, we brought you gold at $250. We brought you silver at $4, and we brought you yellow flawless diamonds 6 years ago, and now the prices are going absolutely crazy. I'm so happy for all of our clients that are in this market. And again, it's in no way, shape, or form too late. This is a market that's going to go substantially higher, and we only deal in yellow flawless diamonds. Go ahead and try to find one today, except through us. They're almost impossible to get, and that's why the prices are going up as high as they do. The fact is that it's portable private wealth. At the beginning of the show, I cautioned everybody as to how severe the economy is going to get over the next 5 years, with a major setback possibly coming next year. The fact is that if you're sitting in paper assets like stocks, the chances are excellent you're going to lose all your money. You will never be able to retire the way that you want to if you're sitting in mutual funds and stocks. But if you put your money into a diamond with a track record like Yellow Flawless is, you're going to find that just under normal circumstances, a Yellow Flawless diamond will double every 4 years. In fact, over 10 years, a diamond that you can buy for $20,000 will be a $100,000 diamond. Now, we feel that because of the financial markets at this point and what's happening in the diamond market, the inflation markets, and the currency markets, that we're going to see a massive run in the price of yellow diamonds like we did in 1979 and 80 when they went up 500% in 2 years. We believe that over the next 5 years, because we feel that the U.S. and the Federal Reserve will not raise interest rates for 2 years, so basically that's going to bring on heavy inflation. And then when you have hyperinflation or strong inflation going into the next 3 years, that's when these diamonds can take on a life of their own. So we feel that a $20,000 diamond purchase now could be a $100,000 diamond in the next 5 years. If you're sitting with money in stocks and you understand what I'm saying and agree that the risk in that market is more severe than it's almost ever been before, quite simply take the money out of that market. Sell out of your mutual funds and stocks. Keep some of it in cash. Pick yourself up a diamond and put it away for retirement and for safety, because the prices of these diamonds never, ever go down in value. I've been in business, in the financial business, for 35 years, and I've dealt in diamonds for a major part of that, and we have never, ever seen a reduction in the price of yellow flawless diamonds. So the fact is, while you can still get them, and I'm very fortunate because, again, realizing that we put our money where our mouth is, and realize that